Deven Choksey joins in on board. Deven, hi, morning. For a fourth day on the trot, we've had a red close for this year. More importantly, we're failing to hold on to 6,200. What's causing this some sort of nervousness in the market?
Yeah, good morning. Well, I think it's very simply understood. I think the market probably, is not taking very positive view out of the kind of Delhi state government, which is coming up with the kind of a subsidy-based rulings. And this is quite, disturbing, because one after another states, if they start adapting to the subsidy base of working, then probably overall subsidy, if we combine all the states together, could be really tricky and troublesome. That's where the market is nervous. At this point of time, though no big sell-off is taking place in the market, but a serious money, if it has to come into the market, it requires the confidence and consistency in the policy. That's where one is finding a little bit uncomfortable at this point of time. Maybe it's a time which people remain conscious also, because the result season is getting started, and probably ahead of result season one would not like to open up big positions, particularly in those stocks where the headroom is relatively less. In many of the frontline stocks, you find that the headroom is relatively less, and that's the reason for which you don't find too many people coming up to open up the new position. But on the other side, you find that there are takers for some of the quality mid-cap ideas, and actually you are seeing the action shifting from frontline stocks into some of the mid-cap stocks. So that's well explained that whereas there is a kind of a dislike for the frontline stock for the time being, given the situation, people have started accumulating some of the good quality mid-cap stocks in order to generate alpha in the portfolio. So the action is well explained. Probably we will continue to remain in the trading range. To my mind, Nifty trades in the range of 6,050 to 6,350. Anywhere closer to either side of the band, you might see the action taking place, or buy or the sell action taking place in this situation. But so we will continue to sail through this period, maybe in this month of January.
But Deven, does it seem like that this narrow band that you just talked about could be well challenged, because Friday onwards we would be staring at earnings and they are sure to be volatile?
Yeah, if it has to be challenged, and probably assuming that it has to be challenged on the upside, then in such situation you might want to see participation coming off from some of the heavyweights. And participation coming from the heavyweights cannot be without the performance and the profit performance in the quarterly results. Now consider the fact that Infosys, the stock has already moved up ahead of results in this particular last quarter. So in anticipation of results, etc. So I don't think that the heavyweight could influence. TCS likewise can't influence beyond a point. Same is the situation with companies like Reliance. So I'm not saying I'm bearish, but I'm saying that these are the stocks which could possibly lead market to the newer levels, but they are already quoting at a reasonably higher level given the kind of earning expectations. So to my mind, index movement would remain muted. It would remain in the range. It will not change beyond a point. What you might see is action coming up in individual stocks based on the price point at which they are available, or one could sell at a higher level of price. So that's where you would have to concentrate more as far as actions are concerned.
Deven, any thoughts why Arvind has done exceptionally well of late? Because Arvind is not a pure play exporter, it also is a local retailer. At a time when in general the retail sales have plunged and retail sales are unlikely to pick up given what is happening to the economy, how come a retailer is doing well?
Well, there are two ways in which we look at this particular situation for Arvind. Of course, what they are right now doing is they are correcting part of their earlier strategy. They are bringing back the complete value chain manufacturing out here in the country, back from what they started in Bangladesh and returning back into the country. So to a greater extent, what they are trying to do is from complete fabric to the garments, a complete value chain is being done in India. That's a corrective part of the strategy. That is expected to do well. That's what is the game plan suggests. And of course, the real estate business has been contributing to that extent, for the purpose of supporting the company onto such kind of expansion activity, or the vertical expansion activity. So to my mind, this company is correcting its strategy. Market is giving a kind of a positive weightage to this particular stock, because in the market space, you require listed market space, you require some of the quality names where you can bet on. This is one company which one could possibly see a brighter future going forward. So it is expected that it would turn out to be better numbers, but at this point of time discounting seems to be a little bit on a stretcher side. I would say that I think wait for some time. If it is available at lower levels, that would be a good opportunity to buy into the portfolio.
What could be that lower level, 130, 120 or sub 100?
Somewhere between 120, 130, I think would be the level in which I think the stock should be once again considered to add into the portfolio.
Deven, what according to you seems to be causing this amount of nervousness on Infosys ahead of its earnings? The stock was down a good 1.5%. Sure enough, there have been senior level exits, but that shouldn't be hampering the growth of the company.
I'm not saying I think too much of nervousness either. I think the market is basically trying to play a little bit more cautious at this point of time. Generally, it is understood that having run up this particular stock and seen the kind of a run up in last quarter, I think obviously it needs to create further headroom before it goes up. And given the kind of expectations on the result side, I think on a constant currency term, if we are expecting somewhere around 1.5% QOQ growth, and if we are expecting the margin or the growth guidance getting revised from 9-11% to 11 to 12% going forward, then in such situation, I think what market would trade would do, I think, a little bit cautiously at this point of time. At the same time, the last quarter has been a quarter in which I think relatively less number of billing days were there, is understood for the IT companies in general. So from that perspective also, I think market is not wanting to buy afresh into the Infosys this point of time. Maybe some corrective downside, and I think you could see once again buying returning back. I don't think that too much of concern is being assigned at this point of time to the exodus of the top level executives, because it is understood that the corrective strategy which is being implemented for Infosys is going to probably play a bigger role for the company going forward in tomorrow's time and weed out those efficiencies. So I think market is playing a little bit more cautiously ahead of result, as I would say.
Deven, but the real price action or the strong momentum is now visible in mid-cap IT. Persistent has moved from levels of 600 to 1000. Mindtree has appreciated from levels of 1000 to 1500. Tata Elxsi was at 150 3 months ago. Now it is trading above 400. You think markets are right, and are markets justified in revisiting mid-cap IT as a group, as a theme, or somewhere that trade is getting stretched and is also looking crowded?
Not yet. I don't think that the trade is still getting stretched as far as the mid-cap IT is concerned. Consider the fact that I think those companies which were available at a valuation sub 10 Ps, and I think somewhere around closer to 10 Ps, and consider the fact that I think they have been showing a decent amount of growth of 20% plus, where the risk awareness was there in the earlier past, wherein I think people had considered I think the frontline stocks I think in the portfolio. Now the risk appetite is returning back, so obviously I think companies which are growing at around 20-25% rate of growth in whichever space it is, I think be it in IT space or be it in other space, I think the risk appetite is returning back into the market, and that's where you are seeing the actions coming up. Like take for example, I think company like KPIT, I think which falls in the similar category of mid-cap IT space, where again I think the growth prospects have been much stronger. Year after year I think the company is showing I think better traction. This year also the expected working is going to be better. Leave aside I think some part of the provisioning of the forex loss that they may do in this quarter. But the fact is that I think such kind of companies are showing higher amount of top line growth and the bottom line growth as well. I think they would get the recognition in the market, and that's what we are seeing. I am not totally surprised to see 40-50% kind of appreciation coming up in many mid-cap companies. They probably have started discounting FY15, I think 12 months in advance. Maybe I think at some point of time in market in the corrective downside, I think they become opportunity to buy at relatively at a lower levels if they are available.
Okay, Ranbaxy this year has done rather well. In fact, if I map the Nifty 50 losers and the gainers, Ranbaxy is right at the top there, and this year Ranbaxy is appreciated by about 6.5%, almost 7%. Deven, do you think Ranbaxy could be the dark horse for 2014? Whatever could go wrong for Ranbaxy has gone wrong. US FDA problems, they've lost market share in the domestic market, the European business is not doing well. You know, just like after a bad tide, a good tide comes. Do you think after a bad 2013, 2014 could be a good year for Ranbaxy?
Well, expectedly so, I think, because I think most of the negatives I think which were to come, I think has already come. And company has already made the provision, profits, etc. for those particular events, I think, which have happened in the course of their business. What I also see, I think, the possibility of Ranbaxy, I think, jumping up or bouncing back, I think, in 2014 is also because of, I think, the commitment becoming stronger for Daiichi, I think, to basically, I think, revamp the operations of Ranbaxy and make this set, I think, more productive the price at which they bought it, certainly I think it is right now quoting a discount. So certainly it makes case for the promoter to try and make more efforts, and that's what I think they have shown commitment of. Still, we don't have quarterly estimates on those numbers. I think what would be the commitment reflecting into those numbers. But yes, I think it's expected that the worst is behind them, and probably the company could start performing better in coming quarters. I think as we calculate the possibilities of Daiichi's involvement in increasing in the business activities of Ranbaxy.
So from a 2014 perspective, out of the 4 pharma names, which is Sun Pharma, Cipla, Ranbaxy and Lupin, where do you see the maximum upside?
It's always very difficult to, I think, predict, I think, where exactly I think the market would give the preference into these companies. But if you ask me, I think couple of companies, I think Cipla and Ranbaxy, which have not moved as much in last years, I think they hold reasonably good chance of, I think, appreciating around 20 to 30% from current market price levels. Consider the case of Cipla as well. I think having built up a good amount of formulation capacities and the generic products that they have in the pipeline, including the ANDAs, to my mind, I think Cipla could possibly surprise a big time on the upside in the coming year. I'm not saying that other stocks may not perform. I think Sun Pharma definitely distinctly looks, I think a very positive company for sure. But the fact that I think on the pricing front, as far as the stock market is concerned, I think Cipla could definitely surprise on the upside. That's what my take is. Ranbaxy has already shown some initial movement. I think, of course, with more clarity coming in, it could also follow the suit. But if you are talking of 20-30%, I think these are the 2 companies that I get confidence. I'm not too sure whether Sun Pharma and Lupin could give 20-30% appreciation, at least in the first half of 2014. Maybe we will have to wait till the second half of 2014 or maybe financial year 15. I think in which you might see some performance coming back from the Sun Pharma and the Lupin. At least they would create the headroom, I think, in that period, probably.
But Deven, just want to talk about, FT as well as MCX. Does it seem like post the Cleanup Act, these names make a good bet, or would you still wait and watch out as to how things go?
Well, certainly, I think on a standalone merits, if you want to consider companies which is in the exchange business like MCX, or a company which is like in business of providing the, I think, IT solution to the exchanges and also holding the stake in the exchange, I think this, like FT, I think these are some, on a standalone merits, I think these companies are definitely, I think, good. I'm not saying they are not good business models. What it requires is the kind of known concerns to get out of the way, and probably investors get more confident about the business future of these companies. So certainly I think any such kind of action happening like what we saw yesterday, a 300 crore worth of a transaction for National Bulk Warehouse, I think, facility which is being sold off. In such situation, I think one could find the interest returning back into companies like FT and for that matter even MCX. So I'm reasonably confident about the business model, though I'm not too sure about the uncertainties continuing into these particular companies because of the kind of nature of NSCL problem that one has seen.
Deven, what's the sense that you're getting about names like a Bharat Forge? Couple of upgrades coming in, but do you like the story?
Yes, certainly. I think both from the auto space as well as from the infrastructure or the capital goods engineering space as we call it, I think for Bharat Forge, which is a non-auto space, I think this is one area where I think the company could possibly start showing better performance. Given the fact that I think in earlier past we had the problem with many of the capital goods players, I think not being able to produce enough amount of business because of the projects not moving on. Now that I think the engineering side of the business is, I think, probably also pick up, and that's where I think the new entry of Bharat Forge could possibly prove quite meaningful going forward. And at the same time, I think the American business environment returning back into, I think, a bit better times. If one could possibly argue that yes, I think if the manufacturing activity in America has to return back now, then in such situation, companies which have already positioned over there, they would have better times, and automobile segment particularly is going to face a better time going forward. Bharat Forge is already well positioned in that environment. So to my mind, I think the improvement in the situation and recovery in the situation could probably give a better chance for Bharat Forge to produce better performance. Though we have not calculated FY15 earning estimate as of now, but do believe that I think there is a scope for a better performance coming up for the company going forward in next financial year.
Deven, I'll take my chances with this one. Another stock which has trended up very smartly in last 1 month is BF Utilities. 52-week low, 110, 52-week high, the current price which is 600 rupees. Do you track this one? Because I'm picking up a lot of buzz from some of my friends that a lot of smart money has moved into BF Utilities.
Well, I think we are not actually looking into this particular company. I think from all the projects that they carry and I think the kind of status that they have. But it is basically understood that I think given the kind of infrastructure hurdle which are being cleared, I think by the PMO, in such situation, I think many of the infrastructure asset ownership business companies, I think could possibly do well. And BF Utility has the kind of a road development project portfolio in hand. I think that could ultimately, I think, get started at some point of time. That's what I think the understanding is. But I'm not updated on the current status of the same, so won't be able to give any specific view on that. But certainly, I think I would consider that many of the power generation companies, many of the road development companies, I think could possibly see better times going forward. And BF could be one of them, I think, which could possibly show better performance going in coming times.
Alright, Deven Choksey, appreciate your time and you have a wonderful day and a wonderful week ahead.